All right, good day, folks. Today we're going to take a look at lean hog futures. And if you recall, the last video update, we took a look at cattle, which we recommended a short on, and that is moving quite well. Here's a quick recap on that cattle trade, getting short April cattle based off technical and seasonality. But going back to the hogs here, we're now looking at a potential seasonal short in hogs. So we've got a weekly chart over here on the left, daily chart over here on the right. You can see that we're running or bumping up into long-term resistance or price structure. Now, we are looking at a continuous contract because we're able to capture more data. However, when we go and look for a trade, we'll be doing so in the May contract. So there's no data over here prior to December 2019 because nobody was trading it. There was no liquidity in that market. So we're looking at the continuous contract to give us a little bit of a broader market picture. And not only are we trading into resistance or price structure here, we are also trading in line with seasonality. So looking at a 5, 15, and 19-year chart here of May hogs, you should be able to see this area right around in here. This is an area where mid to late February, early March, that all of the historical price averages pretty much top out, and they trade to the downside going into April to mid-April into early May. So this is a key period where market participants are starting to lean to the short side, and this is exactly what we have going on here. So we've got the market have stretched up to extreme highs, levels that the market has sold off in the past, and so we want to prepare ourselves for a potential trade to the short side. Now, what I also like to do is compare that against our smart market scanner or smart future scanner, and we do have a couple of trades here. Now, they don't quite fall into the time frame that we're in now. You can see we have a lower odds bearish trade in early February. Average profit's $45. That's a terrible trade. Looking at the next trade is right around in March. It's also a bearish trade. This one's a little bit better, 80% win rate over 10 years. Average profit of right over $1,200. So it's been a pretty consistent trade. You can see year after year with a couple of small losses. And this is exactly what we're looking at. So how do we trade this? Well, I'll likely be participating by buying put options on lean hog futures. But if you don't trade futures or futures options, there are a couple ETFs to consider. First one being COW, C-O-W, that's the ETF that has some agriculture or meats exposure. You could also look at MOO, M-O-O, another ag ETF that is going to replicate more of the movement of meats in general. So those are a couple ideas to look at or consider. Liquidity is not going to be too great in MOO or COW, so that's why we would prefer to trade hog futures or hog futures options. But if you have any questions, feel free to reach out to me, and we'll see how this one plays out once we get technical confirmation. Have a great week. Good trading. We'll see you on the next update.